Hello and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets are set for a mildly positive start amidst mixed global cues. Talk about Gift Nity. It's indicating a mildly positive start coming in for Indian benchmark equity index. However, Wall Street indices ended marginally lower on Thursday. Fall was recorded after the release of latest economic data, which suggested that the number of Americans filing for jobless benefits increased slightly last week. Layoffs dropped to an 11th month low in July, the Labor Department report suggested. Talk about the regional counterparts. They're trading mixed on Friday following overnight losses on Wall Street and rising bond yields. Let's talk about the FII data. They've been sellers for fifth consecutive session thereabout. Offloaded shares, although to a minuscule amount of around 317 crore. Talk about the DII's data. They've bought shares to an extent of 1,730 odd crore. Now, in terms of the earnings that we'd like to watch out for, State Bank of India, the giant, will be reporting in the numbers. Apart from that, you have M&M, Britannia Industries, Aditya Birla Fashion, Alembic Pharma, Bharat Dynamics, BHEL, CESE, Dilip Bilcon, Delivery, Devyani International and Edelweiss Financial Services, along with Gati and Gujarat State Petronet IDFC, amidst the bunch of stocks that will be reporting in their quarterly earnings on August 4th. Let's talk about the FNOQs in that case. FIIs have been net sellers when it comes to the index futures. They've sold to an extent of 3,441 crore. And if you talk about the index options, they've been buyers to an extent of 19,587 odd crore. If you talk about the sellers, for the stock options, for stock futures, they've been net sellers to an amount of around 4,600 odd crore. And also for Bank Nifty futures, they've been selling off to an extent, but the amount is minuscule there, 194.2 odd crores. They've been net buyers overall for the Bank Nifty options, and the amount there is 5,845 odd crore. Do keep in mind the stocks that are currently under the FNO ban list, and NSE right now, it's retained Gujarat Narmada Valley Fertilizers and Chemicals, also known as GNFC, and Hindustan Copper, along with Piramal Enterprises. These are three counters which are currently on the ban list that you need to keep on mind. But let us get going and discuss some stocks and strategies with Milan Vaishnav, CMT, founder and technical analyst at ChartWizard FZE. Good morning there. Pleasure to have you with us. I'm going to start off by your assessment overall for the markets. Three consecutive sessions of sell-offs coming in for the markets. Do you expect some amount of consolidation to take place, or do you expect this trend to further continue?
Very good morning, Nickey, and happy to be here on your show. With that, we might have many reasons to cite for the recent decline that we saw in the market, such as lower earnings. Not as better as expected earnings, or downgrade coming in by the Fitch of the US and all that. But this was seen coming as near 19,900 odd levels, because 20,000 levels had seen a massive buildup of the call OI, and with the VIX staying very low, close to 10, was never a comfortable place to be in. So with that being said, recently, following the decline that we have seen, what I see that Nifty has dragged its resistance levels lower, that is between 19,500 and 600 levels. I see that I see two things happening. One, a small technical rebound, which I expect, which might happen either today or by Monday, and that technical rebound will find resistance between 19,500 to 600 zone, because 19,500 is the pattern support that Nifty has violated, and 19,600 623. To be precise, is the 20-day moving average which Nifty has ended up violating. So I see two things: Nifty staging some minor rebound and finding resistance between 500 and 600, 19,500 and 600 levels.
All right, that's the word coming in when it comes to the levels that we like to watch out for. But what's the strategy there? Quickly, in less than 15 seconds on.
Strategy, I think we should try and take long positions if you are an intraday player in Nifty and Bank Nifty both, and play for some minor gains while putting very strict stop losses in place. That's what I would say for today. And
All right,
any
sir,
that
we'll
should
get
be
back
used
to you. We have taken the strategy. Let's address the markets open for you. Well, we are looking at a positive start coming in, and it's not a mild one. We're looking at gains to an extent of roughly thereabouts, closer to 0.4% out there. It remains to be seen how the last trading session of the week, which has thus far been a disappointment of sorts for investors, stacks up. And with a positive start there, Bank Nifty Index, another one just to see if there is an outperformance coming in from that basket as well. We are looking at gains coming in for Bank Nifty, 0.3% of gains coming in for that one. In terms of small cap and the mid cap index, we're seeing some traction building in for the broader counterparts too. Let's see if small cap is doing any better. You see the outperformance thereabouts for small cap. It's more than 3/4, closer to 3/4% of the gains coming in for small cap index. Let's look at the other sectoral indices that we have overall on the list. IT seems to be doing well, gains of around 0.6% out there. And if you talk about the FMCG basket, it's holding up, gains closer to 0.5% out there. And if you talk about the other sectoral indices that we have on the list, pharma, the defensive pack, be it pharma, be it FMCG, or for that matter IT, all of them seem to be doing well in trade. In terms of other sectoral indices that we have, auto basket, it's doing well. We're seeing good numbers percolating down even for Eicher Motors. We're going to be addressing in the stocks and news in just a bit. Consumption story remains intact. And if we talk about the real estate index along with PSU and the private bank index, just to see the flavor of the market, realty index pack is also doing well. Let's look at metal for that matter. Private bank, well, also shining right now in sync with the entire banking index. Let's talk about the metal basket, which has done well thus far, but witnessed some amount of profit booking in previous session. That's the one probably outperforming the peers, right? 0.75% of gains coming in for metal index. And let's talk about the advances and declines. Market breadth right now is in the favor of advances, 45 advances as compared to 5 declines. And let's talk about the top gainers. Cipla, of course, is the top gainer there. We're going to be addressing in the news there. Hindalco, Novelis has reported good set of numbers. Tata Steel, Bajaj Finance and JSW Steel. So you have a bunch of metal names which are doing well for us in the morning trade, at least in the opening deals. Let's talk about the top losers that we have in the list. Barely any, but Bharti Airtel makes it on the list on back of the numbers out there. Power Grid, HUL are among some of the companies that have, which have made it to the top losers, along with Adani Enterprises and Kotak Mahindra Bank. Right now, market breadth extremely in the favor of advances. 46 advances versus 4 declines. That's the market breadth. But let's address in Eicher Motors number. Uptick of 17% top line, 23% uptick on the operational front. The margins somewhat are around 26% as compared to 24%. Profitability up by 15%. Top down, it's a beat. If you look at the business, CV businesses recorded the highest ever first quarterly sales number for, when you talk about the sales, it's been one which is a record high level that we're looking at just for the CV business. If you talk about Bharti Airtel, well, it's the only counter which is not faring well on back of earnings, of course, where consolidated sequential numbers, if you talk about that, revenue barely up by 4%, net profitability takes a hit by 46%, and if we talk about EBITDA, it's up only by 4.8% as compared to the margin. They've been at 52% as compared to 51.9%. But if you look at the ARPUs, 200 rupees versus 193. Also to bear in mind, there's a one-time loss of around 3,400 crore due to changes in Nigerian foreign exchange operation. As a matter, there is a lot of chatter around this one, needs to be addressed. Revenue up by 71%. Let's talk about the net profitability. The number has come in at 2 crore versus the loss of 186 crore. That's where the whole discussion lies, that the new age company has finally turned around, but that's on account of the tax credit adjustment which has taken place. If we talk on the operational level, it is still lost to an extent of 48 crore as compared to 307 crore. But do bear in mind that the losses on the operational level too are narrowing down. And how? Tax credit in this quarter, tax credit was also there in the previous quarter. But what remains to be highlighted is the fact that the operating leverage has finally started playing out, which essentially is reflecting on the bottom line performance along with the tax credit. It's just not about the bottom line one-off number, but also the overall improvement in the financials. The real breakthrough will happen when we see an operational profit coming in for the company, which remains to be seen how many quarters away for that one. Lupin, extremely strong set of numbers out there. It's a beat. Revenue up by 29%. Talk about the EBITDA. It's at 856 crore as compared to 232 crore. You can see the amount of multifold jump on the operational performance. Margins at 18% as compared to 6% that the company has recorded in the corresponding quarter. And the profitability is coming at 450 crore as compared to a loss of 89 crore in the corresponding quarter. Exceptional set of numbers coming in for Lupin. Of course, the company benefits from a milestone income of around 205 odd crore. The margins, however, have been at a multi-quarter high since the highest that we've seen since the Q1 of FY 2022. Now, let's talk about Hindalco, which is shining in bright on account of Novelis, the wholly owned subsidiary in the US downstream company, which has recorded solid set of numbers. Well, better than what at least the street was estimating, not in totality. Let's talk about the top line number. It slipped by 20%, still better than estimates. Adjusted EBITDA is declined by 25%. Net income continues to drop at 49%. However, the good part is that there is an improvement in the EBITDA per ton sequentially, because of which you're seeing that reaction coming in. The guidance remains intact, and the management has suggested that going forward, they're headed towards $525 per ton in Q4 FY24, which is the end of this financial year. Overall, North America and Asia EBITDA per ton jump sequentially also hints that the worst of destocking is behind. They are also expecting some amount of volume growth that is expected to play in. Paytm, where the company average monthly users have risen by 19%. The volumes have, if you talk about just for the payment volumes for merchants, they have rose by 39%. What essentially I wanted to highlight about Cipla was there's an ET exclusive one which is coming that Blackstone, it's set its sights on buying Hemdeals from Cipla. It's going to be submitting in a non-binding bid as early as next week. It's going to be bidding to acquire entire 33.5% promoter stake with Cipla. That's a big development coming in, but I'm going to go back to our technical guest out there and check with him if he's still around. Milan, I just want to understand, how are you looking at Cipla right now and something like a Hindalco, which is doing extremely well in trade?
I'll first begin with Cipla. Cipla is in a very strong uptrend. So there are two things that we need to look at. Number one, that entering afresh at present levels is something I would not recommend, because it will not come with a good risk to reward ratio, because the stock is deeply overbought and highly overextended. So one can stay invested in Cipla by trailing the stop losses to roughly around 1150 zones, and stay invested in Cipla, whereas fresh entry is something I would not advise right now. And coming to Hindalco, Hindalco has a very good setup. It had staged a breakout from an bullish ascending triangle formation. It broke out and then retested that support level, which was around 455 or 456 odd levels, and it has resumed the up move. So I think Hindalco has got some decent move on the upside left. We can expect levels of 470 to 475 there.
All right, Milan, we're just going to leave it at that. Thank you so much for taking out the time and speaking to us this morning.
Pleasure.
All right, let's address the fundamental side of the business. Too much is going around, change of direction, change of what's coming in for Indian equity markets. But let's address all of this in detail and more with Gaurang Shah, Head Investment Strategies, Geojit Financial Services. Good morning there.
Morning. How are you, Nickey?
I've been doing fine. Good to see you. I'm going to start off by asking you your assessment on entire new age stock, specifically the one about Zomato. You know, there's a lot of chatter around the street doing that the company has finally recorded in a profit as compared to the loss. probably because of the tax credit adjustment which has come to fore. What is your assessment overall?
So thanks, Nickey, and morning to all of you all. Thank you for inviting me for the show. So first, a disclosure, we had a subscribed recommendation for the IPO when Zomato came out with that fresh paper. And I believe the floor was somewhere around 65 or 75, correct me if I'm wrong, or thereabouts. From that level, the stock went up to 150 and then it corrected because of earnings concern, and it corrected below the IPO price. 60 rupees or a little bit lower than that was the low that it made. From those levels, it has recovered because of the visibility of earnings and the management commentary. Well, even if you take out the tax portion, then definitely the number looks good. And more so, I was listening to the commentary of the management yesterday. And their sense is that more than Zomato, that is the food delivery platform, essentials delivery platform, that is Blinkit, is likely to throw in tremendous amount of positivity in terms of earnings as well as contribution to the balance sheet. Having said that, the stock where it is trading 95, well, it is almost our target or thereabout, close to thereabout where the stock is trading. And other new age unicorns or the new avatars, as we call it, likes of Paytm and the Nikias of the world, I think after a stellar listing and a drastic or a terrible correction from those levels, somewhere the valuations have found some kind of sanity levels. And I mean, again, on Paytm, I think somewhere close to 500, we had come out with a buy recommendation. Even Paytm, where it is trading, it has almost touched our target price. So you need to be a little bit cautious buying into these kind of stocks, despite the fact that they've corrected and they've recovered. I think what one needs to see is consistency in earnings, because earnings translate into the growth of that company's share price going forward in the future.
Sure. Clearly, there was this huge argument for Zomato where people kept arguing that the tax credit is just not in this quarter, it's also in the previous quarter, and there is some amount of operating leverage which is finally kicked in for the counter. But I guess the test really will lie back when the company breaks even on the operational front. But navigating the conversation now towards the pharma basket, Cipla for that matter, we're seeing bunch of reports out there which are suggesting that probably Blackstone will be picking up stake, the entire 33% equity which the promoters intend to sell. Your assessment, what do you like within the pharma space, and how are you looking at Cipla after the revised guidance out there?
So yesterday we saw Sun Pharma, Nickey, and I think over there also there is improvement on the earnings front as far as their overseas business are concerned. Earlier there was an overhang, but unfortunately, let me tell you this, Nickey, that even today, as recent as I think about a couple of weeks or days back, we had red flags from US FDA on pharma companies as far as product recall is concerned, or good manufacturing practices are concerned, or establishment or manufacturing processes are concerned. So that's a little bit of concern. And whenever you have these kind of news coming through on one particular pharma company, the entire pharma universe goes for a toss. That's another sad part. Having said that, the name that you mentioned, Cipla, we have a buy coverage. The name that I mentioned, Sun Pharma, we have a buy coverage on the fundamental side. Along with that, we have two more names, that is Divi's Laboratories and Dr. Reddy's. Couple of names are also there, but I think if one is to concentrate on top 3 or 4 names, then these would be those names wherein people can look at investing from a long-term point of view. But let me say this, you won't see that rally late 2020 and early 2021 when the pandemic broke and we found a solution in terms of oral as well as injectable vaccines. Gone are those days. Those kind of glorious golden days are difficult to return. But the fact of the matter is that India is and will always remain pharmacy to the world. But you need to be stock specific.
All right. So what's your pecking order there? Cipla, Sun Pharmaceuticals, third company is what? Are you also looking at Lupin? It's reported a beat in the numbers. And overall, your assessment on the equity markets, do you sense a direction of correction coming in, or you think it's just a temporary phenomenon?
Honestly, Nickey, I think what correction? Hardly any correction. We saw a high of 19,991.85. We touched a low of 19,300 or a little bit below that. Now, if you look at point wise, you will say, oh, we had a 600, 700 point correction. But if you translate those points into percentage and look at the base and the high of the Sensex and Nifty, it would be hardly 2.5 or 3% or thereabouts, So if you, I mean, at almost 20,000 Nifty or maybe 68,000, 65, 68,500 Sensex, if you are not able to digest 3, 4, 5% of correction, then you need to introspect in terms of your investment strategy, whether you should even explore the possibility of coming and investing into equity market. And I always say this, Nickey, that equity markets are exposed to all kind of risks, that is locally as well as globally. But this is an asset class which generates value, just in case if you invested in a particular stock from a long-term point of view and in a sound and a good company and done a little bit of homework. I think this is a great opportunity. It's just a intermediate correction, as I say it, over a prolonged bull market that we have. And you will get these kind of corrections. One should not be surprised, nor should one complain about this.
Okay, it's a retail investor which probably need in quick and fast money. Not everybody is long-term invested into the markets, but that's a discussion for another day. Gaurang, how about Concord versus SBFC, which is the IPO you like the most?
I'm sorry, can you repeat the name?
SPFC versus Concord Biotech, which is a Rakesh Jhunjhunwala-backed company. Between the two IPOs, what do you like?
Well, unfortunately, we have not initiated any coverage, nor do we have one. So I won't be able to comment directly on which one to buy and which one to avoid, Nickey. But I think I will leave it to the understanding, wisdom, and fine sense of judgment for investors to possibly look and read into the fine print and possibly have more concentration on the valuation front and then take a call whether to invest or not to invest.
All right, Gaurang, we're going to leave it at that. Thank you so much for taking out the time and speaking to us this morning. But let's talk about IPO. Backed by Rakesh Jhunjhunwala, Rare Enterprises, Concord Biotech, based in Ahmedabad, it's set for public issue on August 4th. The pharma company aims to raise around 1,551 crore by offering in 2.09 crore of equity shares, accounting for 20% of the paid-up equity at the upper price band. This issue solely consists of an offer for sale by Helix Investments Holding Private Limited, PTE Limited, supported by Quadria Capital Fund LP, an Asia-focused healthcare private equity fund. The company has set in a price band of around 705 to 714 per share. Rare Enterprises is the key shareholder with 24% stake and has a lock-in period of 6 months post the pharma company's IPO listing. But to give out more detail about this company, whether it's a buy, avoid kind of an IPO, we've been joined by Anubhav Sahu, who's a senior research analyst at MC Pro. Good morning, Anubhav.
Hello. Hi. Good morning, Nickey.
Anubhav, hi. I want to understand your assessment overall on Concord. What do you make out of it? Does it stand out as compared to its peers when it comes to the niche business that it operates in? And also, let's talk about the valuations. Do you find some interest there?
Yeah, so quite an interesting business to look at, particularly, anything which comes from the API space gets the attention because China is a dominant player and we are looking at different called China Plus One. Now, within that, Concord Biotech has even a more niche exposure. They are into fermentation-based APIs, and that too in the therapy space, which are quite rare. One is oncology, and secondly is immunosuppressants. So they are doing well. They enjoy good market share at the volume level, at the global level on the volume front, and they enjoy quite strong barriers to entry, and that is what has got reflected in the financials also. They have an EBITDA margin of 40%, around rate ratio of 24%. So as a business, it's quite interesting one. Valuation wise, it's not very expensive. It's slightly at premium when we look at the API space as far as India is concerned. But then we also need to understand that there's no like for like peer in India. There's only one company, Biocon, which competes with the Concord Biotech in few of the molecules, except that most of the peer set in India are actually in a different set of a chemistry, and a lot of them are actually dealing with commoditized APIs, which is not the case with Concord. But of course, if you look at the peer set outside of India, the ones which are coming from China, Korea, or Israel, I think the IPO pricing is not very expensive. It's quite that range. So we have a long-term subscribe because of this business mode. And I think investors who are looking for a long-term investment into this kind of a business or looking for to cover up a portfolio gap as far as the API holdings is concerned, this is an ideal candidate to look at.
Sure. I was speaking to the management yesterday for Concord, and apparently Quadria Capital is exiting. It's a complete OFS, as we all know. But Rare Enterprises too has a lock-in period of just 6 months post-listing. Does that worry you at all?
Yeah, CC, on the upfront, of course, whenever there is a total of a sales kind of an IPO, one needs to dig deeper and see, whether it should worry us or not. If we just look from a private equity investor, now this particular investor, they got into Concord Biotech in 2016. And they have been invested here for a period of about 7-8 years. Now, that's a typical duration which the private equity player actually looks for as far as the investment is concerned. For a new investor, now what to look at in such kind of IPOs, whether the IPO is coming at a fair valuation or whether it's coming at a very expensive valuation. We think that it's not that expensive. I mean, it's something which one should look at from a little long-term horizon. As for Rare Enterprises concerned, they came into Concord Biotech quite early, actually. They probably, I think, invested something around 2003 or 4. That was a very, very early stage for Concord Biotech. So I think of course, they have a lock-in period of 6 months. But I don't see that as an important parameter to look at.
Anubhav, just sum it up for us in that case. Just the last question. 3 key positives for this one and 3 challenges for this IPO.
So key positive for that, for Concord Biotech, of course, they are in a very niche space. They are working to, they are present into fermentation-based APIs for which we don't have many players around. They enjoy a strong volume, strong market share in some of the molecules in which they are operating. They have a very healthy balance sheet, cash rich, and operating at a very healthy EBITDA margin. Coming to concern, which one should be looking at in future, is that they are getting, they already have a sharing formulation and they want to expand a business in that front as well. Now, the formulation compared to API, as far as Concord Biotech is concerned, is not that margin accretive and probably can face more competitive intensity in time to come. That's something to watch. And as far as this business is concerned, it's a quite energy-intensive business. So, for example, Concord Biotech has an energy cost of 10% of sales, so that's something to watch. And the other thing, last parameter to watch as for the concern for biotech is concerned is that 1/3 of the raw material which they use, they get it from China, which is a high dependence on China right now, though management say that they are capable enough to, almost nullify the dependence from China.
All right, that's well put, Anubhav. Thank you so much for taking out the time and speaking to us this morning.
Thank you.
All right, do bear in mind, it's an OFS only IPO. Investors often in the previous past had mixed sentiments for OFS, and due to a variety of reasons, like this involves the sale of existing shares held by the current shareholders rather than the issuance of fresh equity. This can lead to concerns like limited capital growth for shareholders, the shareholders' intention, valuation consideration, and the company's performance, amongst other things. Well, with this, we'd like to conclude here and, we'd wrap it up. And goodbye from the entire team who puts this piece together. Thank you so much for watching. And please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.